Hi, Saen Higgins here. And in this video, we're going to talk about how to get a house by paying the tax lien. Think about this for a minute. Does it sound too good to be true? Typically, if it sounds too good to be true, it's just a little known government program. And that's exactly what this is. In this video, not only am I going to show you how to get a property by just paying the property taxes, but I'm going to show you the difference by houses versus commercial versus lots, the whole 9 yards. There is a plethora, big word alert, of money to be made in this area. So stay tuned. At the very end of this, I'm going to methodically walk you through the very beginning steps to financial security for you and your family. Also, if you like this stuff, if you don't like this stuff, if you do, I don't know, you wouldn't be watching if you didn't like it. So listen, hit the like. But more importantly, if you have a question, if you've had an experience out there, if anything in your local area, if I'm not cutting something, talking about something specific to your area, just write a comment in there. I answer all of the questions on this channel. So make sure you do that, and I'll make sure I keep producing this great information. Now, let's talk about this. Can you buy a property by buy a house just by paying the property taxes? The short answer is yes. The longer answer is kinda, it depends. So one of the things I don't want you to do is start looking for houses that you wanna live in because they didn't pay the taxes off. So when I first started teaching this, people said, how can I buy a house by paying off the property taxes? I'm like, well, you can and you can't. A better way to look at this is you find a property that is being sold for back taxes, you buy that, sell it, and then buy the house that you want. Think about that. The odds of the property that you and your family want not paying the property taxes on are slim and none. As they say, Slim just left town. So I'll give you an example. Years ago, I was in Dallas, Texas. I was at an auction, downtown Dallas, but right there by the area where Kennedy was shot. If you've never been there before, it's quite surreal because you walk around that corner and there's the book depository and everything else like that. And literally the sale is only a couple blocks from there. And I went down to the sale, down meaning it was down the basement down there. And one of my students was in there and he was all excited because they literally, he says, Saen, we're doing it. We're buying a property for the back taxes and we're gonna live in it. I go, you're gonna live in it? He goes, well, actually not yet. They were looking at a lot, okay? It was a fully improved lot in an area of town that they wanted to build a house on. So I was like, well, there you go. You're proving me wrong. So that can happen, but that is a needle in the haystack. A better way to look at this is, how can we find a property that is, a house that is being sold for the back taxes and acquire that? So this is a very interesting topic because, again, like I said before, it sounds almost too good to be true. And it isn't, okay? But there's a lot to know before you get to that point. So again, I'm gonna go back to the two different sides of the same coin. A tax lien, you're not getting the property, you're just giving the money to the county until the property owner comes down and pays that off and you get your interest rate plus the money that you invested. Whereas half of the country says, you know what, we're gonna give them 3 to 4 years to be delinquent on their property tax. Literally, nothing happens for 3 to 4 years. But at the end of 3 to 4 years, they're like, dude, enough's enough. They say dude. A lot of them in the county, they'll say dude. Doesn't matter where they're at. They say dude or dudette. It could be a dudette. Equal opportunity for you ladies out there. And they can say, listen, you gotta pay your taxes off. And why is it 3 to 5 years? And this is just my personal philosophy on it, or my understanding is they're saying it takes about anywhere between 2 to 5 years to come out of a financial slump. So when this was put together way back hundreds of years ago, they said, look, if somebody's on their back and if they're struggling, let's not take anybody's property for a few years of back taxes. Let's give them a time frame. No one can lose a property for failing to pay a couple of years of back taxes. It doesn't happen anywhere in the United States. At a minimum, 3 years it can go to sale, but even then, they still get one more year of redemption. So it's a minimum of 4 years. You have to be delinquent on your property taxes a minimum of 4 years anywhere in the country before somebody can come in and pay the taxes and get the property. I don't know how you feel, but 4 years, enough's enough. It's time to pay your property taxes. Everybody else is. So there you have it. That's how it works. Now here's the key. You've got to identify the states. Let's start there. The states that offer it that way. So for instance, there are some states out there that say, nope, once you've been delinquent 1 year, we will sell the lien on the property. Not the property, but just the lien. But about a little less than half of the states out there say, you know what, we're just going to let it go for a year, 2 years, 3 years. On the 4th year or 5th year or whatever that is in that particular jurisdiction, they say enough's enough. We're going to gather up all the property taxes that were due on that property for that time period, and we're going to offer them at a sale. When somebody comes in to purchase those tax liens, or excuse me, pay off those delinquent taxes on there, then it becomes that person's property. Now I am simplifying this because that's technically how it works. If I go into a sale in, say, California, and I give them the money for the back taxes on that particular property, I own the property. Period, end of story. But there are hybrids out there. There's some with redemption periods. For instance, I mentioned 3 years. So in the state of Georgia, what they'll say is at the 3rd year, we will offer this property up for sale, but the property owner has 1 more year, okay? And the investor gets 20% penalty during that 1 year should you come in. But at the end of that 1 year, boom, it's time to foreclose on that property. They end it. So in reality, the county is kind of delegating the act of actually foreclosing on the property to you and me. They say after 3 years, you can buy it. Then you got 1 more year before you can start the foreclosure process. That way, we're the county and we're not doing anything on it. We'll let you guys do that. Okay, so, and that's kind of smart by the county's point because now they don't have to hire somebody to actually do the foreclosure and the legal ramifications that go with it. They say, hey, you want it? You foreclose on it. But the act of foreclosure, that final act of going through that process, me going to the sale and I put my hand up and they say sold and I give them the money, I own the property. Okay, there is no liens and encumbrances on that property. So it's not, well, you get the property along with all the debt with the property. This is the only lien on a property that can be sold at a sale that wipes out and extinguishes every lien on that property, including a mortgage, including the IRS. And people go, what? How is that possible? And it's funny, because over the last 30 years that I've been teaching this, I've taught everybody. I've taught older, younger, but I've also taught kids. And it's so funny. When I tell some of my younger kids in their teens that, hey, this is how this works, they're taking notes, the mortgage is eliminated. You know what they do? They put a line through it and move on. And then there's my adults. They're like, you can't do this. This guy's full of crap. You've got to be able to pay the mortgage. Not true, okay? This is the only lever that the county has. If you don't pay the property taxes, I mean, think about this. Ultimately, the county controls the title. They don't care about all these other people. If they don't pay us, we have the right to do this and take the property, period. We need our money paid. But now, I don't sneak up on Bank of America or whoever else is lean against that property or the IRS and say, we got the property now, you guys are gone. And the banks know this. They know that if I foreclose on a property or the county forecloses on the property due to delinquent property taxes, I would have to notify everybody that's got a financial interest in that property, including, if Aunt Sally lent them some money. Everybody gets a notification. They're going to have a time period. Okay, that time period can be anywhere from 60 to 90 days, maybe even 120, again, depending on the municipality. And this is what makes it so beautiful. Everybody does it a little different, so you can't systematize it. You know what I mean? You got to know the markets. So I go in there and put those notices out. If one of those parties that has an interest in that property, a lien against the property, does not come in to protect their position, which would be to pay the taxes off, make no mistake about it, there is no gray area. There's no ambiguity here whatsoever. If I put my hand up and they say sold, I own that property. There is no possibility for those people to come in and protect themselves. The only time there would be a possibility is, like I said earlier, if that state said we're going to sell the deed with a redemption period, meaning it's going to give that property owner some type of a time frame to pay that off. Typically as low as 6 months in some areas, sometimes as high as 2 years in others. But during that redemption period, when you put your money up, there's going to be a penalty. Not an interest rate, it will be a penalty. And the chances of them redeeming during that redemption period, as they say in Texas, are slim and none. and Slim just left town, because I want you to think about it. If somebody owes $10,000 in back taxes and you and I go to the auction and we bid it up to $30,000, they not only have to pay me the $10,000, they have to pay me what I bid, which was $30,000, plus a penalty on top of that. I mean, if they didn't pay 10, they're not going to pay 30. So the likelihood of you getting redeemed during that redemption period are a big fat zero on that. But they could, and you've got a big fat check with a penalty on that. And again, there's a lot you need to understand before you get before you go to the auction and process saying, I want to get that property. There's so many different things. And the best way to get properly prepared for the sale is take my new course. It's free. Okay, I've got so much that I can't cover in here. I'm going to walk you step by step where to find the list, when the lists come out, what are the hottest states right now. All you have to do is click the link down below, higginsmethod.com, and that's my gift to you. And we'll go extensively through how this works, and then you can determine if this is for you and your family. This is Saen Higgins saying God bless and good luck.